What's up, traders? We're back. Trade Masters, November 17th. This is your king, your reigning champ, back with you for yet another week of fun and adventures. This week, I've got Coach Mark joining me, trying to take over. He may succeed. We shall see. But I'm excited for another round of this. We'll get into what the details are here in a second. But Mark, say hello. How you doing?
You know, I am not doing too shabby. Listen, I'm excited to be here tonight. A little bit challenging. You and I were talking about this pre-show, right? It's been a good last month. I mean, right? Portfolio account should be up. It's been a great trading environment. There was lots of momentum. It's a little more challenging in this environment. Broad markets seem to be doing stable, but man, there's a lot of weakness underneath in a lot of different areas. And so finding good setups has been a little bit challenging this week, but I think I got 3 good ones. And Kate, unless you steal one of them, of course.
Yeah,
which means like a coward, you're going to go first, right?
I do play to my advantage. Last week, I believe
as every trader should.
As every trader should. Last week, I believe the phrase we threw around was "all's fair in love and war." So, to your point, though, yes, market has gotten a little bit squirrely, specifically just the last couple of days, right? Just the last couple of days, it's been a little bit squirrely. So we'll see how she goes. Name of the game for Trade Masters, for those that haven't been here, is we have 3 rounds. The first round, I'm going to mix it up, Mark. First round is going to be theta round. Mark and I will both pitch a cash flow related trade. Second round will be delta, a directional trade idea. And the third round is wild card. Anything goes. Mark and I can bring up whatever we want to try to sway you. After each round, you guys will vote who is the winner. Best out of 3 goes. And Mark, I have never been part of a Trade Masters where somebody won 3 out of 3. And so it's always been 2 out of 3. So we'll see how it goes tonight, though.
Well, listen, if you beat me 3 out of 3, I really like my 3 picks. And if you beat me out of 3 out of 3, listen, I'm a big believer in the Coliseum, the mob, the audience. It's what makes their palate wet, so to speak. Listen, our job is just to give you some good ideas, which we try to do with education, with different things that we do. I know you have your cash flow. Your Team Phoenix, and I have my cash flow Vikings, 2 trading labs. It's been a good month, right? It's been a good month. We both run practice journals, very successful months on both fronts. But tackle trading as a whole, we're just here to give you some good picks, and whoever wins, that's just the cherry on top.
Indeed. Well said, Mark. Well said. Okay, so I will go first. As I said, theta round, and I am going to start with the largest company on the planet, comes from the tech sector, rhymes with Snapple, and we are, of course, talking about Apple. I was very impressed today with the breakout attempt in Apple. Apple has been quiet for the last month. This was one of the best performing large cap stocks today. And I particularly liked the broader strength in technology. When you look at the NASDAQ ended green, not by much, but comparatively small caps were down 1.3%. I always like when one sector taketh and another sector giveth. I like when certain sectors pick up the slack when others are lagging. That is a sign of a healthy market. It makes me like what happened today a little more than if tech had been down on the session. So, Apple didn't have the strongest close, but I think 1.65%, I'm going to declare that a victory nonetheless. I like the volume uptick as well. Remember, this tried to start running right before earnings and sold off after the number. It has spent the last 3-4 weeks building a base, and this is the breakout I think that we've all been waiting for. The ideal scenario is for this to follow through right up to 157.26. That's the short-term target. Now, I waffled between whether or not I wanted to use Apple as a directional trade or a cash flow trade. And there were maybe 1 or 2 reasons why I'm putting it as a cash flow play. One reason is all my other picks, I think, set up a little better for a directional play. The other reason is because Apple, as bullish as it's been over the long run, it's had a fair bit of chop over the past 3, 4, 5 months. I would like to position myself to make money, even if we don't see a monster follow through on this breakout. I think that the breakout I would like to treat as Apple tipping its hand as to what the path of least resistance is, however slow it may go. So I can get far enough out of the money to sell a nice little credit spread. I was looking at the December 145, 140 bull put. Right now you can get about, what was it, 55 cents or so. And I feel like we got a pretty good shot here. It's got to break the 50-day moving average. It's got to break horizontal support at 147. Seasonally, really the bullish tailwind that equities have into year end is going to be supportive of anything that we pitch today bullish. But just to structure the trade here for you all, December's 30 days out. The 145 strike is a 19 delta. I like selling deltas below 20. You get at least an 80% probability. If we sell the 145 and buy the 140, you're getting 55 cents, well over a 10% return, which is the minimum for me. And I think it's pretty straightforward. December 145, 140 bull put for Apple.
I mean, I
Mark,
got nothing to say. I mean, the only quibble I would have is just, but you've already addressed it, is, the whole, directional versus cash flow. A fine cash flow play, though, especially for those that like bull put spreads. Yeah, I mean, that's pretty textbook, right?
Yeah, and to your earlier point, it was hard to find things that were interesting today. So a stock like Apple that breaks out on an otherwise dull day in the market that sees weakness, it just kind of jumps out at you, and I think makes this an easier one to attract you to. How you play it, kind of up to you, but I think the relative strength is undeniable.
Indeed. All right, you want to turn over the screen to me so I can.
Ooh, I do. Do your worst here, Mark.
All right, so I'm going to give you a play on an $8 stock that gives you a better credit than the credit you just got. All right, the better credit on the credit you just got.
I'm intrigued.
Listen, one of the areas in 2021, in fact, not one of the areas, the best cash flow area for me in 2021 have been the Bitcoin miners. Not even close. It has been just a monster years. Continually through 2021, the Bitcoin miners have produced huge premiums, lots of volatility. You able to just time and time again get good play. They've just been a home run. And one of the things that I have really enjoyed about the Bitcoin miners, and I've written about this recently, go check out tradingjustice.com. I did a whole 5,000 word article on an introductory to Bitcoin proxies. Go to tradingjustice.com, go read the newsletter published a few weeks ago to get an idea of what Bitcoin proxies and the way to play them all are about. But there's been a little miner out of Canada called Bitfarms recently that has bucked the trend of a lot of the volatility in some of the other miners. One of the things I have really come to love about this little company is, one, they're doing everything that the other miners are doing. They are mining Bitcoins, investing in new mining equipment, and holding their Bitcoin. In fact, they have held, out of the Bitcoin that they have mined this year, they have held 96% of it. Now, I could go to more expensive plays like a Mara or a Riot, but when you look at production totals, Bitfarms this last month, in the month of October, Mara mined 417. Bitfarms wasn't too shabby, too far behind at 343. And this is what we have seen with Bitfarms continually, time and time again, month after month after month after month. They have a new batch of mining equipment, a couple thousand new miner equipment, which is hard to find these days. You've had to order them in advance. You've had to have forward thinking in this area. Thousands of more miners are going to be installed in the next couple months. And it's just set up to be a just by the book, exactly how you do it mining operation. Hold your Bitcoin, invest money in new mining equipment, get that hash rate up, and provide, build a really great business model. Now, one of the things that also stands out to Bitfarms to me is they had earnings a couple days ago. Stellar earnings, stellar earning response. If I go to a lot of the other Bitcoin miners right now, a lot of volatility. Mara, for many reasons, that looks like, boom, boom. Riot, a lot to do with the amount of cost they have. The cost to mine a Bitcoin by Bitfarms is far lower than Riot is producing right now. So we have a little company. That is Hut, another company I like, but a lot of volatility. Bitfarms, I think the trading and investing community has looked at their recent earnings report, and it has held up really well, holding those short-term moving averages in the face of all the Bitcoin volatility, being like, there's value here. It is just, I cannot say enough about this company in what it's doing in the space. All right, but we're here on the cash flow round, right? We're here in the theta round. Now, a simple strategy that I have used throughout 2021 has been a simple boomerang strategy, where you sell a naked put on a miner, you get this fat premium, and if you happen to get any downward movement, which happens, it's Bitcoin after, right? You don't get those huge premiums for nothing. If you get any volatility, then you institute a simple cost average down. You start selling covered calls, look to add more shares at lower levels, and that rinse and repeat philosophy on Bitcoin miners, by being conservative at first, and then willing to add more if it goes lower, if Bitcoin becomes volatile, has just been a winning formula time and time again. The premiums right now on the December 750 strike are just too juicy for me to ignore. I've sold a few of these this week, currently getting, this is just an outstanding return. If you love a company, because once again, just because it has a high return, you should never, ever sell a naked put on a company if it has a high return. That is the worst reason in the world to sell a naked put, is because it has a high return. But when I can get a big fat return on a company that I want to own anyways, on a strategy that I easily can manage, and I can get 76, 77 bucks on an option a month out at $1 lower than where it's trading right now, on a company that has shown recent momentum, because that's one of the things about all of my picks tonight, and I imagine Tyler's too. I don't think this is a bottom fishing market right now. I think this is a play into strength. Where is the strength in the market? Where's the strength in the market? Where's the strength in the market? If you don't have a pretty pattern, I don't have a lot of interest. Maybe early in 2022, maybe at some point I'll get back to looking some bottom fishing, but I want to play into strength. I want to play into companies that have had great earnings reactions. I want to play into charts that are really healthy. It's a check the box on Bitfarms. If that was a 50-cent return, I probably would have brought Bitfarms as my pick as well. The fact that I'm getting 76, 77, which if you annualize that over the course of a year is well north of 100%. I love the high premium play on a quality Bitfarm, a quality Bitcoin mining operation that the market has definitely been agreeing with in recent days, that despite the Bitcoin volatility, every time this thing takes a little dip, quickly bought up, came down to the 9 EMA today. What happened? Instant buy. Heaven help if Bitcoin actually goes up. This is an automatic play that you'll be able to close out. really quick if you want, or just see it go to zero at expiration. The only worry I have with Bitfarms right now is that it takes off to the moon. That's the only worry. That's when I know I love a play. Nice little bonus. If naked puts aren't your thing, you can pick up at about 60, what is that? About 65 cents, maybe 66 or 67, depending on your fill rate. Bull put spread.
Yeah.
If you want to do a bull put spread instead of a naked put, love the company, love the strategy, and oh my gosh, that premium is just too much for me to ignore. Love it. Bitfarms is my pick for the theta round.
Boy, these are two really diametrically opposed or opposite trades here. From an ROI perspective, I was looking at the margin requirement on Bitfarms in a margin account. It's like $70 over here. So your return on margin's like 100%. I have nothing. I have no rebuttals on Bitfarm. I got nothing. Good pick. I like it.
No, and Max Law, I mean, listen, I always like it, it's like one of the things that I've loved about, because it's harder to find. You found a lot of them at the start of the year, some of these cheap stocks. It's harder to find companies that you really, really like that are cheap, that provide high volatility.
Yeah.
There were a million plays 10 months ago, not so much anymore. So when I can find one that I like, it's just, I mean, I really, really, really like this company. I think it provides genuine value. The fact that I get some huge premiums, bonus.
Yep. Well said. Yeah, honestly, you covered this from A to Z. I got nothing to add on Bitfarms. So round one, theta round, Apple for me, Bitfarms, lovely Bitcoin miner for Mark. While the masses are voting here, Mark, let's pivot to round two, the Delta directional round. And I am actually going to have you go first.
Happy to go first. Listen, once again, I think you play into strength in this market. All three of my picks, as long as they're not stolen by Tyler, I think you just play into strength. I mean, if it's a weak chart, man, just revisit that when you get a good technical pattern. One of the areas that I'm a little underexposed and trying to catch up a little bit is gold. When I look at gold, itself, I thought there were a couple telling candles along the way. If we go back a couple weeks, gold had the ability to sell off, big red candle on a day, break short-term support. In fact, I even said to myself on that day, I was like, gold hasn't responded well to big red candles in recent months. It hasn't responded well at all. You had the opposite reaction, kind of that bear stop out, quality reversal, and then just short-term momentum is taken off on gold. Staying above those short-term moving averages, climbing up, nice couple week run, forming a little bit of a pause here, which I think is very healthy. You don't want gold to do this. You want gold to do this. It's a very beautiful pattern right now. And when I was looking out at the last time gold had a really stellar run like this, it had some legs. It had some definite legs to it. Multiple weeks. We're only a couple weeks into this. And, I'm reading more and more analysts talk about how, and I don't think this comes as a shock at anyone, that we are going to have, the CPI in early part of 2022. Who knows what it plays out from that point? But in the early part of 2022, CPI is going to probably be running pretty hot, right? This is not, a wild, oh my gosh, let me just throw out something out there out of left field. We know inflation numbers are running hot. They're probably going to run hot for a couple months. Now, gold has really, in the midst of all of the inflationary aspects, really taken a back seat from a sentiment standpoint. People have been talking about, Bitcoin as the new inflationary protection. You're starting to see more and more mainstream analysts come out and talk about talk about the potential of gold outperforming equities over the next 6 months. UBS, the bank, says the risk for further strength in the CPI in early 2022 could stoke even stronger demand for gold. Pretty standard analysis right now. But Bloomberg a couple days ago came out with a piece and that said gold may outperform the S&P 500 index by about 20%. Concerned over peak economic growth, rising inflation, yada, 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 the whole macro theme. I think there's a real chance for gold to overperform. You know, like we talked about at the start of the charts, I mean, traders like to trade, right? They like to trade. And there's few and few areas where people are like, right? I mean, what are you supposed to do? Go get into EVs right now? That's pretty stretched. A lot of the underbelly charts are weak. Small caps charts, good luck finding very many small caps that have a beautiful chart. You can play tech. Tech has some, you know, pretty charts in it right now. But as far as diversified plays, there's not a lot of pretty charts out here. And one of the things that we have seen, I mean, just go look at the EV run, go look at Bitcoin run, go look at things. When something runs, it can run. And if gold can get a spark here, I think it has a serious leg up. Now, whether it outperforms the S&P 500 index by about 20%, I don't know about that. But I'm not going to go put all my money into gold, right? I'm going to go look for a quality opportunity. And I think we have one in GOLD. When I look at GOLD, I got all of the characteristics of something that if I didn't know what the trading instrument was, I was like, that chart piques my interest. You know, when we look at the recent, you know, not a classic double bottom, but, you know, double barrel, double bottom, right? A little bit higher, break of resistance, holding short-term moving averages, and then stalling, but starting to get through the 200-day moving average. I would like that chart, even if it didn't have a thesis behind it. Just independently on the chart, I'd be like, that chart looks very, very, very appealing to me. Love the characteristics, love how it's stalled here, giving a chance for short-term moving averages to catch up. Really would like the chart. The fact that I can build a pretty good thesis behind it on gold, on why gold might run, it gives me some room for some potential legs here. Now, there's been, so I like the chart pattern. I think the thesis behind gold is pretty decent. I love a stock when I can not only match technicals, but I can be like, yeah, I can see why traders will get behind this. You know, fewer trading options, looking for the next hot theme, the inflationary storyline, maybe Bitcoin stalling a little bit. Hey, we got to go do something, right? I mean, I can see why this, aside from the technicals, could go up. So I love that 1-2 combination. I also like a couple of ways you can play gold here. Now, of course, you can just buy shares, right? You know, going for the delta opportunity, buy shares, that's easy peasy. But a lot of people have bought shares in recent months on different gold instruments, and there's been a lot of fake outs, right? And then they get stuck with shares and things go down, and it's like, yeah, what am I supposed to do? I can sell covered calls. So while managing shares here is definitely an option, right? Definitely an option. If you want to buy shares, go for the full delta experience. That's great. I think there's some sneaky ways to play this cheap on a breakout here. I think there are some sneaky ways to play this cheap where that you can potentially get in if gold has a good run, and hence the gold miners follow suit. I think there's some sneaky cheap ways where you can put some cheap money to risk without having to tie up the capital on buying the shares. And I think I got a couple options for you. For example, if I go out to the January option chain here, I see that those 22s, they're, you know, a little bit out of the money. Next strike price out of the money right now. Trading at 63, 64 cents. Pretty cheap. If I wanted to do a 22.27, it would be even cheaper. $5 wide spread, 65 days out, about 50 cents. That is some pretty cheap risk there. If I wanted to go for a little bit longer play, if I went out to March of 2022, same 22, 121 days out, I got to pay $1. So one of the things when I was looking for opportunities to bring to this fine show tonight was, I wanted things that were playing into strength. I wanted opportunities where I didn't have to risk a lot of capital, hence Bitfarms. Before, I don't got to risk a lot of capital. And with the option choices, and I'm not much of an option buyer, but I think they make a lot of sense here on gold. Cheap options, if your thesis is right, you have a potential pretty good hit here. If it's wrong, whether it is a January or March, I don't have to put out a lot of money to make that bet. So love the technicals, love the thesis, love into playing to strength. And I really love just the cheap option play here. Whether it is the $60 January or the $110 March, gold thesis, that's my directional pick today.
Very nice. That is one of the silver linings of an area being out of favor for so long, is those options get cheap. It's not as if there's a ton of speculative froth chasing out of the money calls on gold, like maybe you're seeing in EV stocks, and that can present some pretty compelling low risk ways of playing. So yeah, I like it. All right, let's see if I can fight back here for a minute. You did eke out a win, a W on round one there, my friend. Congratulations.
I was worried listen, Bitfarms beat Apple. I'm actually kind of shocked at that.
Hey, you pitched it well. Okay, so Mark's got gold for the directional play. I have two directional plays. I'm going to save obviously one of them for the wildcard round, just waffling between the two. So let's go with this. In the theme of rewarding strength, focusing on areas that are strong right now, this is going to go along with that. We just came out of earnings season. There are quite a few companies that have had really good responses to earnings. And when you see that, sometimes you can catch them right after earnings. Sometimes you got to wait for a secondary pattern. In the case of this particular stock I'm going to share with you, it has what I think is the cleanest swing pattern going into tomorrow of any stock. Okay. I would defy any of you to go find something cleaner than what I'm going to show you here in just a second. So let me go ahead and stop waiting and let me get the ticker. Expedia Group. I honestly don't usually trade Expedia because historically I just haven't really found that many quality patterns. But I got to tell you, I'm pretty intrigued by what's going on over the past 2 weeks. For starters, look, I know nothing about the earnings history of this company, but I can tell you two things. Number one, they liked what this company had to say on earnings. Very nice gap up to a new high, big volume. And if you just look at the numbers on the surface, earnings per share, $3.53 compared to the past 3 quarters of negative earnings. I don't know if they waved a wand or something, but it seems like earnings this quarter relative to the trend that it's been in were quite good. I tend to believe that earnings are the gift that keeps on giving, that when you get a positive catalyst like this, there's kind of a lingering effect where the optimism and the good feelings and the positive sentiment surrounding this company doing well on earnings usually persists. It usually points, hey, this is the path of least resistance for the next quarter. Look for patterns, look for good entry points in the direction of the earnings response. So you get the nice gap up on earnings, 1 day of follow through, and then a nice, clean, orderly pullback. Red bar, red bar, red bar, red bar, red bar, 5 red bars, no major down bars, no high volume on the sell-off, just a nice garden variety, profit taking, pulls this thing down to a potential support zone, kind of lines up with old resistance here. And then you get a nice reversal candle today, up 1.2%, which is pretty good, outperformed the rest of the market. And you essentially ended with a bullish engulfing candle. So I think you got a nice little trigger bar here. As far as bull retracements go, this is pretty textbook. It's pretty textbook. And this has the type of volatility that I think makes directional trades feasible. IVs come down after earnings, which makes calls cheaper. I think this is an interesting play for a bull call spread. At 180 bucks, it's a little rich to buy call options, in my opinion. So, Mark, I was just looking at buying the 180 call and selling the 190 call. And you can essentially consider 190 the target, which is completely realistic. You can either do this with December options or January. They both have good numbers. December is going to get you paid a little quicker. Jan will take a little bit longer, but you're also going to lose money a little slower. So if you take a look at the December play, you're paying $3.20 for a $10 spread. That means you can make $6.80. So a very good risk reward, very realistic target. And if you want a stop, you don't want to risk the whole 320. You know, if this more than fills the gap and breaks the 50-day moving average, I would bail, but I would give it a little bit of room because I think they'll buy this dip, even if you don't get immediate follow through after today's reversal. And I'll keep it that. I'll keep it short there. Keep it there. EXPE bull call.
No, I've seen you do several. I mean, you love that pattern, don't you? You love the high volume up, lower volume on the retracement. I mean, that is a Tyler Craig chart right there.
I just feel like it's treated me so well. Normally, Mark, I would scale into bull puts and it would give me a higher probability, but there's just not enough juice on Expedia, right? But it's just very rare to get a really positive response and then puke all of it up. It happens, but not very often.
No, I mean, the reopening play as a whole has been just the last week, just been very blah. You've seen the algos do their thing on, like, you know, whatever, airlines, movie theaters, you know,
cruise lines, they haven't well. Mm-hmm.
You know, so
but this one has.
You know, so it's been this very blah week. So the price action makes sense to me. You know why it went up, you know, good earnings, why it went down, just general malaise in the general space. You know, it's a pretty pattern. You know, it's the kind of stuff. I mean, it's like, you know, what I love about this all, Tyler, is that, you know, I love bringing people on Trade Masters just quality picks. You know, a variety of picks too, right? Like, you know, if you had GDX and I had gold, I mean, you know, that's not a very big variety, right? You know, so, you know, bring in a variety of picks so people can, you know, find the ones that they like, that fit their personality, that fit their trading style, and all of that good stuff.
Yep, indeed. Okay, so round two, Mark's got gold, GOLD. I've got Expedia, breakout, long call or call spread on gold, and a little bull retracement in Expedia here. So we shall see, Mark, if they make round three unnecessary. But let's go ahead and kick it off. I'm going to let you choose on round three. You want to go first or second?
I'll go first.
Okay.
I'll go first.
Wild card, what you got?
All right. Once again, I want to play into strength. I want to play into quality patterns. I don't want to do a lot of bottom. You know, and when I say I don't want to do a lot of bottom fishing, that's not really me. Like, I love bottom fishing. I just don't think this is the market for it, right? All right. I also believe that despite the last couple of weeks of blah blahness, I think traders are geared up for a Santa Claus rally. Now, I don't know if that's going to happen. We never know the future, right? But my goodness, everyone's thinking about it, seasonality. I mean, we had such a beautiful run up in, you know, the stock market heading in to this recent stretch of, you know, sideways, you know, take a break. I think it's been very, very healthy for the market to take a break. It is just not feasible. And I talk about this principle in the Cash Flow Vikings all the time. I am not a huge, like, oh my gosh, the momentum's crazy. Let's just, you know, I think especially the bigger the instrument, whether it's a big commodity like crude oil or the stock market itself, man, my biggest worry 2 weeks ago is that you had such a big run that you're going to get a snapback thing. So I love what it's done the last couple of weeks, taking a couple of weeks off after a strong trend, still holding the moving averages, right? Still healthy technical conditions. And I think as December gears up, I think, the Santa Claus coming to town, I think that's on traders' mindset. I think this recent batch of, consolidation taking some time off, I think it is going to play really well into blue chips. Underbelly, small caps, you're on your own, right? I don't know. I don't have as much faith. But as far as blue chips rallying into the end of the year, I think we're going to have a good stretch. And it is really, really hard. So if I want to bet on the Santa Claus rally, it's really, really, really hard for me to see there being a Santa Claus rally without technology being involved. Like, it's just like, I just don't think that, hey, like materials, industrial, health, I mean, everyone can contribute to the broad market rally, right? It's really hard. If I think that the market's going to end strong towards the end of the year, a lot of banks do, a lot of analysts do, varied opinions on 2022, but a lot of people are calling for a fairly strong market heading into the end of the year. I got to put myself in that camp. While I have questions of valuations and this and that, I think we're going to have a strong end of the rest of the year. And I think the technical patterns on the charts are setting up well. Big rally, take some time off, the backdrop of earnings. I think we could have, not the size of the run perhaps that we just had, but a nice size run. So I want to be part of the rally if it occurs. I want to take advantage of that, but I don't want to risk a lot. I want to have this in my reward, but if I'm wrong, I don't want to lose a lot. And I also don't think that it can happen if tech's not involved. I can't see that. I can't see that. So my pick in the wild card round is something I don't really do. I'm not a huge play tech kind of guy. It's not my thing. But when you analyze the sentiment and the seasonality and the charts and looking for strengths, I like what tech's doing here. And I like XLK for a directional play here, basically betting on Santa Claus coming to town. But I don't want to risk a lot either. So I don't want to risk a lot to make that bet. If I'm right, great, make some money. If I'm wrong, well, hey, nothing that I have to worry or manage a lot. Now, when you break down any ETF, you need to know what its holdings are. You need to know what the primary holdings are. And then look what those charts look like. Do the charts of the top holdings look constructive? If so, it contributes. Top 3 holdings in XLK, we got Microsoft. That's not an ugly pattern, right? Set up much like the broad sector. Apple, which Tyler had earlier on.
That's not an ugly chart. It looks great. It looks great, Mark. It's fantastic.
And then NVIDIA, who had earnings tonight. And while the chart's not as pretty today, after hours, we'll see what the response is, up to 307. You break out of there on earnings tomorrow with Apple's chart, with Microsoft's chart. Those 3 companies account for almost 50% of XLK. So you want to trade Apple, Microsoft to the upside on a Santa Claus rally, get a little bonus NVIDIA thrown in, you get a pretty reasonable setup on XLK. Now, once again, so I love the top components charts. Very, very healthy, very, very healthy. And then I got all kinds of stuff underneath, smaller semis, this and that contribute to the party, right? Semiconductors, not exactly unhealthy, right? So I got a lot of healthy patterns in this ETF. I got a pretty good pattern on the ETF itself. And I got a pretty good thesis that, hey, listen, Santa Claus coming to town. I mean, seriously, there's no way Santa Claus comes to town, in my opinion, unless tech parties. But I don't want to risk a lot of money. So I was looking at ways of playing this. And I don't really want a longer term play. I don't really want a longer term play on this. I don't want to have a bull call spread 60 days out because, this is a Santa Claus comes to town bet, and so I was looking at the December 10th options, the December 23rd options, right? The last day of trading before Christmas itself. I'm like, hey, that lines up really nice with the Santa Claus theme, rally into Christmas. And looking at the options, I was like, I can get some pretty cheap risk here. I really like the 170 options. Now this will tighten up tomorrow after hours. It's a little spread, but you split the middle here. You're looking at about 290 on the on the 170 option. Now, if I wanted to, I could convert that to a bull call spread. I like playing it just the option itself. That 290 or so, that puts it in most traders' range. That puts it in most traders' range where it's not excessively expensive. And if I'm going to get an umph, I want to get an umph here. And so, like, I like the directional play. If Apple takes off, that is going to help. If NVIDIA takes off, that's going to provide sentiment. If semiconductors as a whole take off, if they all take off, Santa Claus style, and we have that, hey, let's party into the end. It's been a great trading year. Let's have one last party. I want to get some full directional movement to manage on that. I don't want to be capped on the upside, and I don't have to pay a lot for that play. So that 290 in that 300 range, accessible to most traders. I think the main component charts of Apple, Microsoft, NVIDIA are set up pretty well, especially if NVIDIA holds its post-earnings gap announcement. I think the sentiment is there, and I think the cheap risk is there. I don't recommend technology plays very often. It's not my thing. This one makes a lot of sense if you want to bet on Santa Claus coming to town. So directional 170 options expiring December 23rd on XLK.
You know, I didn't know Apple, Microsoft, NVIDIA were 50% of this. That's quite impressive.
It's a big chunk. It's about like 48, but round it up to 50,
Still.
right?
Yeah, no, I dig it. I like tech. I brought up Apple, and I like the way you're playing it. Okay, I'm glad you went first, because Mark may not know this, but he made a ton of my arguments for me, right? Because of Mark's explanations, my pick is going to be that much better. And I actually am going to I'm going to pick an area that you avoided with this particular pick. I'm going straight to small caps, and I'm going to paint a bullish picture here and mention a few things that I think support this. Okay. So first of all, let's go back for a second. We're looking at IWM. This is going to be my pick, is IWM. What I liked about what Mark did is Mark and I talked about how it was kind of tricky to find really clean patterns because of the messiness in the market the last couple of days, but it's still bullish. Anytime the market is bullish and you just can't find quality individual stocks that you really like the patterns on, you always can go back and just buy the whole market, right? And so if you're ever in a situation where it's like, look, Santa Claus rally, bullish seasonality into year end, I really like the market, but I can't find a trade setup, buy XLK, buy SPY, buy an index, because if the market goes higher and your thesis is correct, it doesn't matter that you couldn't find an individual setup that spoke to you, right? On an individual stock, I should say. So IWM, you go back 2 weeks. You just remind yourself how glorious you thought this breakout was in small caps, how epic the follow through was, and how mad you were that you didn't have enough exposure to this. You say, oh, I'm such a bozo. I had a 10-month trading range. I subscribed to the idea that the longer the base, the higher in space. When you finally tip the scales and bulls take over after being neutral for so long, generally you get follow through, blah, blah, blah. The volume came in. Man, that was a pretty nice breakout there. Pretty good follow through. Impressive. Did what you would have thought after resting for so long. But you missed it. So what were you begging for a week and a half ago, right? Wait, hey, Russell, what about me? Like, I didn't heed the signs. I missed you. Please come back. I would like to participate. If we're going to get it done into year end, if we're going to have some year end strength, come back and pick me up, man. I'm on the island. My ship left without me. I want you to come back, right? You were begging for it. And as Mr. Russell is wont to do, he obliged, okay? He listened to you. He came back. And today he's kissing the 20 MA, right? So don't give me this, I don't know if I like it now. No, you were begging for this 2 weeks ago, okay? And it was nice enough to come down to give you an entry. This was a glorious breakout. What you have to ask yourself, what side do you want to be in here? Do you want to be on the side that bets that this breakout was a ruse, a fake out, and that it's going to go back down and crash and burn? Or do you want to give this breakout the benefit of the doubt that it was the real deal, given the strength, given the volume, given the amount of time we've now spent above old resistance, that, the path of least resistance is likely higher and the subsequent correction is a buy? See, to me, that I think is the more compelling argument. Now, the other dynamic that comes into play here with buying this IWM dip is when you look at seasonal patterns, there is a concept called the January effect, which discusses or highlights how small caps historically have done very, very well in January. And people tend to front run that such that they tend to outperform like in December. I even got a little chart for you. Okay. So remember, there's lots of ways to slice and dice market structure. And right now we're talking about small caps, right? So if you look at small caps versus large caps historically over multiple decades of time, this is a ratio chart that has small caps in the numerator and large caps in the denominator. So when this line rises, it means that small caps tend to outperform. When the line falls, it means that small caps tend to underperform. And you'll see that the most maybe obvious or the most stark part of the chart is this massive ramp that starts in December, call it mid-December, and just ramps through January. For whatever reason, and I think there are reasons that I don't really need to get into, small caps just tend to do well. They tend to outperform maybe mid-December through mid-January. That I think provides a tailwind. Whether it takes root now or in a couple of weeks, that coupled with just the general bullish sentiment into year end, coupled with the really powerful technicals and Mr. Russell being so nice to come back for you after you missed the breakout, I think paints a pretty compelling bullish picture on this thing going into year end. Now, if you want to wait for a green candle or break it above today's high, a little more evidence, that's fine. I'm just pointing out that we're coming into some pretty significant potential support levels. And I think the dip gets bought. So after having said all that, you could chicken out and do a bull put, and I think you'll make money. Okay. But I want to go for the gusto and do something that makes me more if this thing really bounces. And I'm not shooting for the moon. I'm just going to build a nice, simple bull call spread, betting that this gets up towards maybe 245. So we're going to buy like an at the money call. Actually, I'm going to go maybe 236. And you have a choice on the months here. If you want to better encompass that whole January effect with small caps going into January, you can go use Jan options just to give you a little extra time if you'd like. I don't mind this trade with December options either, because I think by the end of December, if we are going to have any kind of year-end run, you will have seen something at that point, and this trade will benefit from that. But I'll build it using Jan just to show you. I'm going to buy the Jan 236 strike, essentially the at the money. I'm just going to sell a 246 strike. You could sell a bunch of different ones and widen or shrink this depending on your cost preference. But you do a $10 spread out to Jan, you're paying $430, $440. You can make about $560. You'll more than double your money. If you want a little more leverage, go to December or widen the spread. But I like positioning myself for a bounce in the Russell into year end for all of the reasons I just mentioned. Mark, by the way, they did make this third round at least interesting.
Oh, you won this? You just won the second?
Yep.
Well, small caps versus tech. I mean, they talk about that all the time in what is it? Market recaps.
Well, because techs are the juggernauts, right? The tech sector is the largest representation.
So, listen, it's been fun, win or lose. It's been fun being here tonight with you, Tyler. It's been nice. Listen, I love talking markets, right? We talk all the times how trading is not a solo sport. And I believe, the older I get, the more I believe that trading is not a solo sport. It is an activity in which you do better, in which you are more successful where you get more ideas, where you can think through your ideas with a community, with a partner, whatever, with other people. For example, we have the Traders Lounge on tonight, coming up in about 40 minutes. Greg Holmes will be there at 8:30, where he'll answer questions. And it's one of the things I love about the lounge. I think you're on it tomorrow.
Tomorrow morning, yeah.
Yeah, and you're on it tomorrow. Love the Traders Lounge, where people can come and answer questions, ask their questions, dialogue, talk markets, talk stock charts, all of that good stuff. Is one of the things we do very well at Tackle Community, a real community of like-minded individuals. Go check out the store tab at tackletrading.com if you want to sign up for a 15-day free trial, and give us a shot. It's a great community, great people. I would not, honestly, I wouldn't be as successful of a trader as I am if I did not have that accountability, those conversations, those ideas shared with others. So, come give us a shot. And plus, we got lots of education too, where you can actually learn, if you're new, about charts and technical analysis and options and all of that. It is kind of a one-stop shop for traders. So, we got any results, Tyler?
Good question. It's a good question, Mark. I mean, no, it's not finished. It's not closed out yet. I mean, it's neck and neck though. Listen, Bitfarms, you threw that on the radar. And I am going to be looking at that tomorrow. That was my favorite new addition.
Those boomerang plays on the miners have just been so good. Wait for technical setups, good credits. Don't go crazy. Like, start small position. It's just been it never causes you any stress, because losing money that never causes you stress. It's not being able to manage positions that can cause stress. If you got too much money in one area and that area goes through a little correction. So, it's just general principles that you'd apply to any area. Don't have all of your eggs in one area of the market, unless you have stop loss.
Well, and there's so many choices now these days that it's really unnecessary to lever up too much in one area.
And that's the phrase I use. It's an unnecessary risk. It's like if I only had one, it's like if I hated everything else and the only thing I liked was uranium, which I do like, then I'd be like, well, I need to be, but I don't. Yeah. I don't. I mean, and especially when things are always rotating in and out, just gravitating towards where there's good technical opportunities, gravitating out when you need to take some profits, rinse and repeat. And hopefully at the end of it all, as we like to say at the Vikings, you get the Valhalla.
You get the Valhalla. That's right. Today, I eked it out 51% to 47%.
Well, listen, that means I get to get drunk next Wednesday is what that means, instead of
well, we're both winners. We're both winners. No, always enjoyable. Mark brings really, really good picks. And look, man, I appreciate you coming out tonight, and I had tons of fun. So thanks for hanging.
Yeah, have a good night, everybody. And if you're new, go check out that store tab, tackletrading.com. Go check out that 15-day free trial. Give us a shot. You won't be disappointed.
Indeed. Have a good night, everyone.